And welcome back to Midday in Kansas. Wrapping things up with another ag topic. We're talking about how the ag industry particularly is going to be changing when the rules of taxes are kicking in, as we have a new tax law in place now. Roger McOwen is with us. He's a Kansas Farm Bureau professor of ag law and taxation. You also teach at Washburn University School of Law. Roger, it's good to have you here on the couch this afternoon. Appreciate it. So we all know the tax bill passed last year. One of the big impacts it has, among many, is how it affects the ag community, and of course Kansas being a big ag state. What is happening?
Well, there are some common things that will impact ag, just like it affects all other non-agricultural businesses, and one of those is the reduction in the rates for most taxpayers on an individual side of things. And then, of course, on the business side of things, for C corporations, major rate cut from basically the top end of 35% down to 21%. But if you're not a C corp, they also have a deduction that applies to you if you're a member of a pass-through entity, such as a partnership or an LLC that's taxed as a partnership, or an S corporation. And that's a 20% deduction of your qualified business income. Now, that one is incredibly complex. There's no tax simplification there with respect to that one. But basically, the individual rate reduction, the 20% business deduction on pass-throughs, and then the corporate rate cut. Those are the big income tax rate items and deductions that are big with respect to this law.
And what about the big ones towards the farming community? We were talking about grain earlier.
Yeah, with respect to the farming community, there are some, of course, ag tax, in many instances, is different than what we would call tax for everybody else, and that carries through in this bill. A lot of farmers like to give grain to their kids, and that avoids the tax on the sale of the grain because it's a gift, plus you avoid some self-employment tax because it's not a sale that would trigger self-employment tax. And you can have that grain taxed when the kid sells it at the kid's typically lower rate. Well, that changes under this bill because once the kid's unearned income reaches $12,500 in 2018, then the tax rate is the top individual rate of 37%. What they've done is they've taken the rate bracket system that applies to estates and trusts and shoved it into this provision. So that's going to change the game with respect to gifting grain. Plus, there are some changes with respect to the depreciation rules that apply to farm assets.
Sounds very complicated. So you guys, you and another law professor, you are going to be hosting a program to kind of maybe explain it a little bit more in depth, and that is coming up next Wednesday, right?
Yep, next Wednesday, the live broadcast, the 2-hour CLE event will be at the law school. We also, you can join us online. It'll be live simulcast over the web. It'll be myself and Professor Lori McMillan. Okay,
a lot of agriculture attorneys going to be interested in this, a lot of tax preparers. Anybody that has tax interests can attend or drop in on this. There is a small cost, though, right?
There is. I think the general public, anybody that's interested in how the new law might impact them would have an interest in it. But obviously, we're focusing on tax practitioners. There is a slight cost to it. It's $50 for the 2 hours for those that didn't attend any of the K-State tax schools this past fall. It's $35 for those that did.
WashburnLaw.edu. Find more information. It happens on Wednesday, January the 10th. Roger, thanks for the expertise.
Thank you.
All right, thanks for watching Midday in Kansas. We hope to see you tomorrow morning, starting at 5 a.m. Have a wonderful rest of your day.
The latest news, weather, and sports at WIBW.com or follow WIB.